I think before we start thinking about value capture back to the token, we need to recognize a few different things. One is like the life cycle or stage of a business, just in terms of how long it's existed and where it is relative to where it wants to grow to. And then also the type of business is quite important here, and whether it's a balance sheet driven business like Athena or like a swap based business like a pump or a hyperliquid. I think they actually look very different. But actually it looks quite different when you have USD as a gas token, because it becomes like almost like a balance sheet driven chain. So I think that is one thing that looks slightly different here, which is it's all the stuff that's sitting on this chain outside of the exchange are much more like NIM type businesses rather than like high transaction fee MEV type stuff that you see normally.
All right, we are live. Welcome to another episode of Bitcast. I'm your host, Jason Kam, aka Maple Leaf Cap. Today is April 17th, 2025, 5 p.m. Hong Kong time. Bitcast is being live streamed to BidClub members. Questions are from the members and my own. Today I'm speaking with Guy Young, the founder of Athena. What's up, man?
Not too much. How things?
I guarantee you the members are here that you just don't see them. Maybe you guys should say hi in the message. I want to start with the Athena's numbers. I mean, I have some high level, numbers here. 5 billion of USD outstanding, 40% staked, of which 600 million is on exchange, 4.6% APY last time I checked, generating about 240-ish dollars of annual interest income, if I'm not mistaken. How should are those numbers right? And then secondly, how does that translate to the revenue that the Ethena Treasury or even the token holders are accruing?
Yeah, I've got a pretty long answer to this, so apologies for the length.
No.
I have a slightly divergent view on this whole sort of question versus the rest of the market at the moment. So I think taking a big step back, I think before we start thinking about value capture back to the token, we need to recognize a few different things. One is like the life cycle or stage of a business, just in terms of how long it's existed and where it is relative to where it wants to grow to. And then also the type of business is quite important here, and whether it's a balance sheet driven business like Athena or like a swap based business like a pump or a hyperliquid. I think they actually look very different. And the reason for that is that the network effects and moat that you build from building a business like Athena to something that's 10, 20, $30 billion in size is very different to something like Pump, which doesn't actually get more useful as a product the larger that it gets. I think you can actually just look at like Tether versus Binance as a very clear reference point here, which is when these type of products become dominant, they are so much more dominant than their peers, even in like the trading space. And so, Binance market share anywhere between 40 to 45% and sort of shrinking actually 3 times. Tether market share 70 to 75. And the reason for that is like when these products become dominant, their network effects compound on each other, which is I want to use Tether because it is the most liquid, and you continue using it and it continues growing and becoming more dominant as a result of that. The reason I'm giving this context is that the Athena story in terms of where it can go and my vision for where I want to take this is just so much larger than where we're sitting today. And I think that trying to clip too much fees back to token holders now of like a few 100K or a million a week is just insignificant versus where I think the outcome of where we can take this is going forward, and actually putting all of that cash into reinvesting into growth, which is basically just going to be the yield on iUSDe, I think is a much better trade-off at this like stage of the cycle for Athena's growth. Basic examples here is like, would the people who are listening to this call think that it's a better long-term outcome for Athena to take $10 million and give it to a Robinhood or a PayPal or a Binance or a BlackRock or whatever it is to help distribute our product, or spread that 10 million over a few weeks of fees that sort of come back to the token? My view is that the former has a much larger impact in terms of where we're going than a little bit of buybacks right now. But yeah, I think that that's my super high level view, which is there is just so much for us to go and do in terms of like integrations and still growing this product to, quite literally 5 to 10x where we are right now over the next few years. And I think that trying to focus too much on capturing a little bit of value now might actually, hinder your ability to actually go and to capture that. And I also think you want to get to a size where people just stop trying to copy Athena and you just give up at some point and you just say, it's the biggest, it's integrated everywhere, and me as a startup coming to actually compete with that, I'm not even going to bother going forward. So that's kind of my view on things. I know that people in the market have this obsession with, capital being returned to token holders and that kind of stuff right now. I think the one piece that I would sort of just stand back and say is that clearly this thing can produce a lot of cash in the right environment. This isn't sort of like a hand wavy This is an L1 where if you 100,000x the activity that's sitting here at like a fraction of the cent, it might produce this much like 10 years in the future. I think it's quite clear that there is like a functional business model here that produces a lot of cash in the right environment. I just think that, like most businesses in the real world, some people need to focus more on growth in the beginning rather than capital distribution. And I think if you go into any normal business and say you want capital returned within a year and a half of being live, it sounds like a slightly ridiculous statement to make. So yeah, I think that's
no, it's a good look. It's a good rant. As a former investor in stocks, I agree. That's a right rant that I should be giving. And just to dive into that just a little bit, we should not be reading too much into the fee switch then, because it seems like you're just not going to buy back, regardless what the fee switch says.
Well, no, I think there's sort of three phases to this, right? There's one which is you make clear to the market that there is no equity code that is rugging token holders for the fees. And we've made that like abundantly clear now. Like the equity is taking zero cash from this at all. And I think if a token is not doing that at a minimum, it's completely uninvestable. So that has been crystallized, that there is no sort of side door that's going to an equity company on the side. So that's like stage one, and that's what we're sort of in the beginning. The second one, I think, is showing that you can monetize. So it might not be that you're taking 30% of the gross interest income. Maybe you take 5 in the beginning and just show the market you can monetize this in some way, but it's not sort of the full extent of where you think that you can actually capture value with this product going forward. We've obviously done that through the lifetime of Athena. So there's $60 million that's sitting in that reserve fund. That's like through cash that we've obviously captured through time with, percentage of the yield ranging anywhere from like 10 to 50% plus, depending on where the conditions are. So I think the fee switch that's coming in, I think is more of a demonstrate, and I'm obviously going to like vocalize this in the governance forum when we sort of tick off the pieces that are on there. But it's more just demonstrating to the market we can skim a bit of fees off of this thing and demonstrating that you can monetize this. But we think the take rate here is going to be X%, where in the future, once you're at 20 bill plus, interest rates are at 2% in the real world. We think that number can be much higher, basically. So that's sort of the sequencing about in the 3 different phases. And I think right now, Athena is sort of between 1 and 2. Yeah.
Yeah, and then obviously you do have a $60 million in the treasury. Of that $200 to $250 million of interest incomes that flows through, you talked about like 10 million to Robin, for example. What is now in your mind the annualized fees that come into the Athena treasury that you can work with, aside from the 60 million that you have today?
Yeah, I think like take rate somewhere between 10 to 20% on that is something that we've been able to capture while still growing. I think that this is obviously, it's a very difficult conversation to have, right, where the interest rate is fluctuating from like 30% in December to 4 to 5% right now. And so if we were having this conversation back then, the number was like in a run rate
like
basis,
500 or something. Yeah,
it was 1.2 bill actually in December.
Okay.
Run rate number. So I think that's a little bit of the difficulty here, which is like, we can be sitting here and talking about the numbers at 250, but like, how this market can change in terms of A, the supply growth, and then also B, the gross interest income. And so I think there is a ton of volatility, even just like on the top line of Athena. And I think that's just pretty obvious from like the product design. But yeah, I think the rough numbers that you quoted there at a point in time is sort of reflective of where we stand now.
And then the cash, the burn rate today, are you tapping from that treasury, or is this separate in the equity box?
Yeah, no, I think it's just with raise funds that we've had through the equity co and then through the foundation before. We don't have any need to either sell tokens from the foundation again, or B, raise any more capital to sort of pay for the operating costs. But like Athena's pretty lean. It's 25 people right now, where a lot of those heads have actually been hired for growth initiatives on both like the new chain, supporting like the ethereal exchange, and then some of the institutional stuff that we're trying to come out with now. So it's actually a pretty lean business in terms of like running operational costs that we don't really need to capture that much.
Okay, so next couple of years, you don't see any need to tap into the treasury. Okay.
No, not at all.
Yeah. And your North Star currently is still the amount of USDe outstanding. Like that's the number you're trying to get up.
Yeah, I think that's correct. Obviously, I think this is like a journey that everyone has to go through, which is like you can issue the product in the beginning, but then like you can be actually quite powerful as a forcing function to create like new growth with some of these new initiatives that we're doing, whether it's like a chain or like other apps that are building around it. And so I think we've sort of done that initial growth with like existing apps that exist on chain right now. And I think the next push for us is like putting in resources where there are new things that are being built with USDe. I think in the same way that Luna actually, despite the ways that they didn't do a lot right, I think they did one thing which was pretty good, which is like say we've got this core product, but we actually want to support these different teams in terms of building on that core product and allowing that innovation to sort of like be built on their dollar product. And so I think that that's kind of like the next phase that we're going through, which is pushing this ecosystem, and Converge is one piece of that. Yeah.
And are you taking any fees on the BlackRock 1.4 billion?
Yeah, so we take roughly 10% of the gross interest income on that.
Okay.
I would say our thinking around this product is less of something that, we're betting a huge amount on the success of the business or like revenue that will generate coming through this. You can sort of think about it as just a very complementary product to USDE for
Yeah.
both go to market, but then also the way that we manage like the backend for USDE. The secret sauce that people still, I don't think, have recognized, which is going to be coming live pretty soon with this, is that actually USDTB is a very interesting way for us to tap into another source of yield, which is the over-collateralized lending market within DeFi. So you can sort of think about what Sky and MakerDAO access right now. We're about to have, this is on the Aave public forums, but about to have USDTB allowed as like a borrowable asset within Aave. Why that's interesting is that actually we can double dip as Athena, which is we're holding USDTB and capturing the full, T-bill yield in the back end for USDE for the liquid
Oh,
counterparty.
funny.
And then you can also lend it into Aave and then collect the lending yield on top. So it's actually kind of like, it's almost like MakerDAO supercharged, if that makes sense, where you can capture like both the lending spread within DeFi plus the T-bill yield on top. And so that just allows us to actually, diversify a bit of the sources of like income that are coming through, but then B, actually supply dollars into markets where people are levering up SUSD as well, like slightly below market interest rates. So yeah, that's one piece which I think will help to sort of
That's good.
smooth the
I think last time we spoke, and I think a lot of us are pretty excited about this, which is the centralized exchange adoption. I mean, after Bybit, we're hoping for a couple more, and then you see Binance out there, doing its own like USD1. I guess, is that still like a big effort for you to get on board with centralized exchanges? How is traction there, and do you think that's a growth venue going forward?
Yeah, 100%. I think, well, the USD one is very much a different product. It's obviously just like T-bill backed with the World Liberty guys. I don't know to what extent they're going to be pushing that very hard, but I sort of see it like another FDUSD on the exchange. I think the one reasonable piece is that BFUSD, I think, has been not great in terms of like an outcome for them. I think it was sitting at 600 mil. They've done I think the management of like the, return on the product and pickup has not been, I wouldn't sort of call it a success relative to the size of Binance in general. Without sort of like naming names with exactly who's coming online, we did have a pretty unfortunate piece with this BaFin stuff, which I'm happy to sort of address publicly here, which is sort of the German regulators having an issue with the Mika application that we put through on USDE, and that actually paused two exchange listings that we had coming out. Obviously, I'm not going to mention by name who they are, but we were ready to go with that, and BaFin basically put a pause into that until we could sort of clear that. So yeah, part of the issue here is we're trying to get that piece cleared, which has been a big blocker for a lot of stuff that we wanted to do basically in the last month, which has been extremely frustrating on my side, and this includes our USD as well. So we've been just trying to work through that on our side, and once that clears, a lot of the stuff can sort of move to the market.
Do you have a sense of timeline on when the regulator hold up would clear?
We're really hoping it's within the next 10 to 14 days. So we put out a tweet this week on basically agreeing with the German regulators to close down the minting entity that we had over there. And they just want to have a 2-week period where anyone who sort of held USD within Germany has like a ability to come and redeem with us. So yeah, based on what I can see right now, I'm hoping it has like full closure within 10 to 14 days. Yeah.
And that's the only holdup with this access. Like they basically tell you that once this is clear, we're ready to go. Is that the right way to think about it? Okay.
Correct.
Okay. Yes. There are a bunch of growth initiatives I want to go into. We can take Converge first because that's the one that is the most recent. I guess the easiest way for me to ask this question is how does it really work with once it's live? I guess when is it live, and then like how does it work with a fund like us or any Wall Street institution? Like what is the flow of dollar, and what do people use it for? Why don't we start there?
Sure. Maybe I can just give you like a super high level what we think the opportunity is here, why we're even doing this, and then yeah, hopefully that sort of gives a bit of clarity from the top. So
Yeah.
I think the frustration that we had on our side in the last couple of years is just actually looking at the inflows that we've had into the market and saying like really outside of BTC ETFs and a bit of stablecoin supply growth, there's actually been no real inflows into the market at all. And you can actually just look at DeFi TVL versus where it was in 2021, and it's actually many like 40% below basically the peaks that it was sitting at during that time period. And so to me, that was actually a very strong indication that we haven't actually built or delivered any products to what I think is the most important thematic thing that's going on within crypto now, which is the institutions are actually here and they're wanting to deploy their products and capital into our system. And really like BTC and stablecoins have been the only thing that have actually been beneficiaries of that. So I think given that, I basically just have the view that if you're not actually thinking about how you're catering your products towards these pools of capital, you're actually just going to be left for dead if you're still continuing to just do the sort of circular DeFi games within our own ecosystem. Because right now, all we've seen is really just like chips being reshuffled between different apps and different chains with no real inflows. If we also just take like another perspective on this, I kind of have a view that there's only two actual use cases for blockchains right now. There's speculation, and I think meme coins on Solana and then derivatives on Hyperliquid are kind of the two obvious use cases there that are being dominated outside of Ethereum. And then the second one is settlement for stablecoins and tokenized assets. And that second use case, if you actually believe the crypto thesis going forward, and all financial assets start to move on chain, and we start to build infrastructure around that, you should think that that second bucket is much bigger as an opportunity than the first one, which is just facilitating trading shitcoins, right? And we think that that second bucket, like Athena plus Securitize, is uniquely positioned to actually go and capture, because you really have like two businesses that are coming from either ends of the spectrum, where Athena is taking crypto native assets, i.e. USDE, and then our institutional iUSDe product, and saying, how can we put this in a format with different applications or just by itself to export out of crypto into TradFi? And that obviously brings new inflows into crypto. And then Securitize comes from the opposite end of the spectrum, which is saying, we've got TradFi assets, and they're going to do a lot more than just treasuries. Their ambitions are to do everything, like equities, private credit, treasuries was sort of just the first step. How can we bring those assets on chain and then plug them into the financial infrastructure that like Athena brings with its ecosystem? And so I think that coverage over there is actually really interesting, because you're coming from two ends of the spectrum of like DeFi plus TradFi coexisting within the same place. And so yeah, this is really the place where when we have this iUSDe product and you have the different RWAs that Securitize is bringing on chain, we're actually just trying to build purpose-built applications and infrastructure for these people to use our products and actually bring inflows on chain. From like a user experience perspective, it actually looks almost identical to what any like user would be experiencing right now. The only difference is that on some of the applications, there's going to be like an institutional button to turn like on and off. So like one example here can be a pendle, right? So when you have iUSDe and you're trying to sell this to TradFi, it was 18% annualized roughly in 2024, but it's obviously an extremely variable rate. Your ability to go to TradFi and say, would you like 10 or 12% fixed on the same asset is obviously extremely compelling to like a huge amount of capital that sits within TradFi, but they cannot interact with like a pendle pool when a North Korean could be buying the YT on the other side. And so the sort of like permissioning and compliance actually sits at the application level, where we're saying everywhere that we found product market fit, building financial infrastructure around USDE, if we put a very thin layer of basically KYC and permissioning at the app level, you actually put that in a format where TradFi can underwrite that on the other side. So whether it's levering up like iUSDe on like Aave's new Horizon markets, whether it's putting it into Pendle, producing like fixed rate returns out of that, all of these different areas that we found product market fit, all we're doing is saying like these applications can exist as like purely permissionless as DeFi or slightly adjusted for TradFi to be able to interact with them. So that's like one piece of that. And then at the chain level, I think there was a bit of a misunderstanding from the market when we came out, and that was my fault in terms of how we communicated that. It's not like a permissioned private blockchain, which is kind of like the first read that a lot of people had. The only overlay that we have in this whole piece is that there's going to be a staking component for ENA, which is actually there for institutional users. You can sort of think about it as like a second failsafe behind the centralized sequencer that sits on like an L2. And so if you have some sort of hack or issue where, whatever, BlackRock's lost hundreds of millions of dollars on this chain, the real risk is actually people moving the USDE or BIDL from that chain into another one where they can then sell it into ETH or some other asset and then sort of like escape with it. And really like the perimeter of where these things are unsafe is actually at the bridge layer, basically, where if you're taking like
Yep.
USDe and bridging it through layer 0, and it comes onto ETH1 and is then able to be sold for anything, then you actually lose money. And so all this is sitting here is doing is providing basically a way for these institutions to stake ENA and actually be part of like the DVN that sits within like a layer 0 bridging network. And so they have an ability to say, actually, if these are stolen funds that are trying to come out, we're blocking that transaction and it's actually stuck within this environment until we sort it out. And so it's actually like, you can think about, Base running a single sequencer, that is much more permission than anything that we're describing to do here, because if Coinbase decides that transaction is not going through, it's not going through. We're basically running this as something which just has a second layer of a safety net or guardrail. It's around like getting assets off the chain, basically, if something catastrophic has happened. Yeah.
I guess then two questions is what's the uptick so far from the institutions, like kind of who are they, if you can disclose? And then secondly, I still have a bit of trouble imagining like Bridgewater, like just 1 p.m. coming in here and just clicking buttons, aping somehow coins that are in Fireblocks into let's say Pendle. Like for somebody like Bridgewater and BlackRock and like Viking and some other actual funds with real custodians that need to like ape into this stuff, how would they go about doing this on your chain?
Yeah, I think it's obviously going to be a slower process than like launching a new chain without a token and then doing a points farming campaign and then seeing the numbers go up. This is obviously something that's going to take a lot more time to actually do properly. This is something that I spoke about in the tweet when we released it. But the things that are hard to do are usually the things that are worthwhile doing because no one else is bothering to try and get it done. So I completely agree with you. It's not going to be easy to get them comfortable, get them on chain and doing things. But it's also because the upside for doing it is so large that you should be taking that bet and putting in the work to make it happen. As it relates to your question around the uptake, we're obviously coming out with the iUSDe stuff, which again has been paused because of this BaFin piece. But we have basically a $500 million commitment from one entity that sits within TradFi to come and like seed this initial product, and that's just them taking it. They're comfortable to actually take it and use it on chain or on centralized exchanges as well. And so to me, it was a pretty strong indication that like $1 with a structurally higher yield, the demand for that isn't $5 billion. It's like north of 100, and we're delivering a format now where we've got a single entity, providing nearly $500 million into that. And so I don't think it's actually going to be like a demand side problem for like iUSDe, the asset. The piece that's going to be a bit harder to draw out is saying like, do you want to go and use this in interesting ways within like the infrastructure that we put around things? And I think that that is going to be something that takes longer to do and it's going to be harder to do. Yeah.
Got it. So it seems like your convo would be more to like, like US Trust and SSNC and those vendors, and basically ultimately getting the funds that are onboarded to them to like somehow buy, your products on your chain. And that would take,
I mean, there are conduits that you can go through, right, to sort of act as middlemen between like big pools of capital and coming on chain.
Yes.
To do things, right? So like, even just naming one fund, but like a Brevin Howard obviously has like access to a $50 billion LP base, and they have like a division of their arm which can actually sit there doing things properly on chain. And so you don't actually need like every single entity on earth to say like, I'm actually physically there doing these things. It's actually, you just need a few connection points to the right pools of capital where someone can be executing this on chain. Some of them might even face into like whatever, a Galaxy that's sitting there and saying, we can actually do these on-chain functions for you and sort of manage that for you on chain. There's like another project, I don't know if you come across, like Upshift. Again, their whole like product offering is saying, we'll collect these pools of institutional capital and then do all of the hard work that sits for you on chain. So I think the key is just getting the product that they actually want to use on chain, which we believe like $1 with a structurally higher yield is one of those big products that actually makes sense. And then putting a thin wrapper of compliance around it, which actually allows them to tick the box to say that we're comfortable with that. And then I think the operational piece of actually getting the money in and out and sort of doing things, someone can always act as like a middleman to get that done. And I think it's just sort of connecting those two pieces.
Yeah. And in terms of, because eventually if it works, like the uptake here from outside capital should be meaningfully more than, let's say, $5 billion if you kind of really nail this. In terms of getting it to a certain level of like heft, like a couple $1 billion, are we talking weeks? Are we talking months? Are we talking quarters in your mind?
Yeah, it depends how you define it, right? Because like Securitize also have a very big chunk here, and like very small changes can materially move that number. So one example here is that we hold like nearly $1.5 billion of BidClub, and if we flip a switch, that moves from Ethereum to Converge, and that's like money that's sitting on there. And so it's quite a big few of these pieces where if we're just making business level decisions to say we're holding these assets here instead of there, and this applies to Securitize as well, that number can be much bigger, much quicker. So I think like, multi-billions in like a few months from launch, I think is reasonable, but a lot of these things are going to be like business level decisions of entities that we're working with just actually shifting their assets in terms of where they're holding them over there. So yeah, I think that's fair. And I think
And it seems like that effort is bigger than, let's say, bringing in stocks and an RWA onto your chain. It seems like that's like much smaller versus, bringing capital and buying crypto products for now.
The stocks will definitely come, and I think there's a very interesting overlap with the ethereal exchange that's launching on there, where they're not just wanting to do crypto perps. Like I think actually, and I've spoken about this on a podcast last week, I think that trying to create a perps product around equities is like a $10 billion idea in isolation if you can do that properly. And so I think there's interesting overlap between all of these other assets that Securitize can bring on chain in spot format, and then thinking about how you add these crypto primitives or derivatives and that kind of stuff around it. So it's definitely on the list of things I want to do.
Yeah, and I guess aside from the accrual to USDE itself, because it will drive USD TVL, when it comes to actual ENA contribution, there are, in my mind, three pieces, which is one, the ENA being bought for staking. The second piece is I think you're going to use USD for gas fee. Does that just get expensed? And then thirdly, are you going to give out any token incentives on this chain to like facilitate action? I guess those three things.
There might be a little bit, but it's not going to be like an excessive like farming campaign. I think a lot of this has to be just driven by, is there real demand from TradFi for these products sitting on chain? And we have to rely on the fact that these, products themselves stand on their 2 feet. So there isn't a plan to do some huge farming campaign for it. I would say,
ENA purchase for staking.
Yeah, there's ENA purchase for staking, and then also we're releasing like the tech documents that come out today, but there is going to be a sequence of this running on the chain, and like the fees there obviously come back to Athena as well. And obviously when you're including an exchange that's sitting on the chain, there's a pretty decent amount of activity that could actually originate from that type of activity as well. So yeah, there is also fees directly from the sequencer itself, which would all be due back to Athena. So there's no new token that's coming out of that. Yeah.
Got it. So de minimis ENA being kind of emitted for ENA stakers that are validators, and they will be earning fees from the USD that is transaction fee on this chain, and you don't really expect the ENA being purchased for validators to be a material driver. Like you don't expect a lot of things to be bought and staked at the moment.
That there'll be a reasonable amount, but I don't think it's going to be like at the size that you see on like L1s at the moment. But I think basic amount of fees that are coming from the chain. But then also like the business model can be quite different, right? Because a lot of the chains right now basically rely on like flow and volume based transactions to capture fees back to themselves. But actually it looks quite different when you have USD as a gas token, because it becomes like almost like a balance sheet driven chain, if that makes sense, which is like the more apps that are using USDE and the more that it exists on the chain, we're just making continuous earning streams just from the gas token being USDE. And obviously the backing that sits behind it. So I think that is one thing that looks slightly different here, which is it's all the stuff that's sitting on this chain outside of the exchange are much more like NIM type businesses rather than like high transaction fee MEV type stuff that you see normally.
And since you have a kind of hope that it's going to be a multi-billion-dollar TVL on this chain soon, this is in addition to the current TVL of USD. Yeah. And like, are there any, I guess, what's the best way to ask this? Like, what kind of effort or which party or kind of is the most instrumental, you think, to this growth of this TVL?
Yeah, I think the first person that we're going to come out with around iUSDe with that number that I mentioned is going to be pretty big. That will obviously be the vast majority in the beginning. I think the piece the reason that we've done this with Securitize, and I'm not sure the market is sort of like fully appreciated now, is that like they are obviously the tokenization partner for BlackRock, and like everything that BlackRock decide to do on chain goes through Securitize. And so having them as like this is like the default issuance layer for everything that them, Apollo, and their other partners are doing to come through here as like the first step is a very meaningful thing, I think, because like if we think about what is the narrative for ETH right now, it's like, okay, well, we lost speculation to Solana, we lost speculation to other places, but institutions are building on our chain. We're actually challenging that in a massive way to say, you don't decide that. It's actually us as the asset issuers and stablecoin issuers, securitization partners who are actually deciding where these assets go and what's actually built on top of them like afterwards. And so that's like one of the big pieces for us, which is there's huge optionality here for what else is there that BlackRock and everyone else that Securitize is working with, what else are they wanting to do here and how can we sort of support that going forward? And this being the default place that Securitize is coming to do that business, we think is actually a very meaningful piece in terms of like, yeah.
As in they are as a part of BlackRock pulling clients into you, kind of doing the marketing. Is that's what?
Yeah, and also like whatever they come out with next, right? They've only done a Treasury product coming out of BlackRock.
Yep.
There is a lot more that is coming. That is going to be A, through Securitize, and then B, on Converge as like the default issuance layer to do that. And so
Interesting.
that's
The funny.
yeah.
The funny deal I saw recently is that they acquired a fund admin that a lot of funds use in the space. I wonder if that fund admin service could just directly plug into your chain, and then secondly is kind of they could sell to traditional funds as well. But that's interesting. That's cool. Would you say Converge is the biggest growth effort under Athena at the moment, or is there anything else that is big that you think worth that ranks in higher priority here?
I think iUSDe is going to be bigger just as a product because not all of it's going to be used on the chain. And I think just holding plain vanilla iUSDe, or people actually just taking it as collateral within prime brokers in the real world, putting it down to get leverage on investment banks, all those different pieces. I think that actually iUSDe as a product can be bigger than Converge as a chain. And I have a higher level of confidence that there's extreme product market fit for that as a product versus us taking, a pretty big swing into something that is like, speaking openly, pretty unproven at the moment, which is like, how much more do these institutions want to do? So I definitely can admit that like the probability of that, working the way that we've described it is definitely lower than us sort of pushing our existing product into TradFi. But like I said, I think the upside for doing this is so high that it's still like a bet that's worth taking on our side. I think that's probably a bigger piece. Yeah.
So tell us more about the progress at iUSDe. Like, how's it going?
I mean, it's literally ready to go. And this BaFin piece, again, has slowed us out from coming out with it properly and the press and all that stuff that sits around it. So at a very basic level, all that's happening is we're putting a permissioning layer around USDe, the asset. So it basically has the same token format and standard that you see with BidClub, where you need to be KYC to hold it and like sitting on a ledger, and you can't permissionlessly send it through any DeFi app and that kind of stuff. The interesting thing about it is that once you put it in this format, you can actually then take it as like collateral to do a bunch of things, even outside of crypto, which is like whatever hedge fund is sort of taking this and has a relationship with an investment bank in terms of just getting leverage, or like a prime broker, this asset then you can actually take out of crypto and say like, who else can like interact with this and where can we use this? And so, for us, it's like, I think just speaking to people, the size of tickets and the cost of capital for people who sit within TradFi is that much lower. So like even 8-ish% is pretty interesting to a lot of people in crypto when the duration is also so short, i.e. you can get your money back in 7 days. I think it's really just waiting for market conditions to be a little bit better where funding rates aren't literally below T-bills like they're sitting right now. And us to sort of clear some of the stuff around BaFin. I'm very confident in terms of like the size of demand that sits out there for a product like this.
And the ownership of this will also be through, like a Galaxy or a BlackRock. Like it's going to be wrapped before it's offered to like real financial actors that don't necessarily have the infra.
Yeah, this is actually a very cool piece, and I should mention it. Like you said, it's been set up in a very flexible like fund structure where actually any hedge fund in the world can come in and work with the tokenization partner that we're working with and actually just put their own fund structure on top of it. So the initial person we're coming to market with is just a very large hedge fund who's basically opening up a platform to all of their LPs and just saying, you can co-invest into this vehicle with us whenever you want. And it's sort of like an investment manager that sits on top of the asset. And all you need to do is send them fiat. And what they're doing under the hood is saying, we're turning fiat into USDC, minting USDE, and holding like an investment vehicle that actually sits on top of it. And so all of their clients don't actually need to fucking touch any USDC, managed wallet, anything. All they're doing is sending fiat into a fund and buying like essentially shares of a fund that replicate the underlying. And so it's set up in a maximally flexible way where you can take the basic legal structure and fund structure that we put in place and actually just like throw in your own like new name that's available. So it's actually
and this box you operate or Securitize operates?
Securitize does basically like the fund admin, the tokenization piece of it, all the like lower level stuff that a lot of people don't want to touch. And then you could even be a crypto native fund and actually just say whatever name. I can pick one out of the sky and just say like, with our existing LP base, this is sitting here, and if you want to put money into this,
that's cool.
And that's sitting on top of it. Yeah.
That's cool. And I guess this is where we talked about before, which is at the minimum, short-term U.S. Treasury rates. At the best, it's kind of a crazy yield that crypto offers through fund future basis, effectively.
Correct. Yeah.
Cool. We'll probably hear about it more in like hopefully 2 weeks. Fascinating. Okay, so we talked about iUSDe, we talked about Converge. There are other things we kind of discussed historically. There's the apps, for distribution. There's the potentially setting up an ETF, and then just apes, USDe, and then sort of redeploying for buyback. There's like, I don't know, is there anything else that, on your list that you thought you're really excited about aside from the couple of things we talked about?
Yeah, I think the other cool thing with iUSDe that comes out of it is you can put it in a format that can actually sit within ETPs and ETFs. So I think an ETF is much less likely now in the US, but we're making good progress on something in Europe around an ETP. And so again, just getting into like an exchange traded format that you can actually just put into different distribution channels there, I think is interesting to us. The other one is I think just more apps that we've seen coming to market. So like the ethereal piece has opened up its testnet now, and there's been like market makers and a few like early testers that are getting involved there. And I think the initial feedback has been pretty positive. Obviously, when these things can be successful, they can be pretty large in terms of the demand sync $4 that go into them. And I think the value proposition there is actually uniquely interesting to me, which is kind of you've got two of the killer products of crypto coming together in the same place, which is kind of dollar with a yield and then speculating on perps. And having those two things like by default integrated with like Athena providing liquidity, I think is actually an extremely interesting and compelling idea, even though the perp space is obviously extremely saturated at the moment. And then I don't know if you've seen like a few of these things that came out this week. I just found this intellectually pretty interesting, was this reinsurance businesses that are actually like underwriting reinsurance in the real world and then collateralizing it with USD on top. So you're almost stacking two forms of uncorrelated yield into a single product, and then they're actually tokenizing that product so you can then take it on token. Anyway, I thought that was pretty interesting because like obviously the capacity to earn 10% like uncorrelated real yields in addition to like what you're using on the SUSD collateral, I think it's a pretty interesting product, and to me is just the thing that I find most interesting right now, which is kind of like real assets or businesses coming in, putting a crypto primitive on top and trying to make it better in some sort of way. And I think that that's a pretty cool use case that's coming out there. And then, as we spoke about it publicly in the roadmap piece, we also have the Telegram launch, which, and for anyone who's going to be there in Dubai, we're going to have some piece that we're taking out a token just around the deployment there. So, I think all the stuff that we've been speaking about here was really on the institutional side of the distribution, like barbell, and then the retail side, I'm pretty excited about. I really think the two avenues there are kind of like centralized exchanges plus Telegram, I think, are the two most interesting retail distributions.
And this is issuance on ton, right? Because they're being a bit
more interesting than that. It's basically like, so right now you only have USDT within like the centralized app and the ton spaces, so like not actually sitting on ton chain itself. I think Ton, like, I'm obviously excited about what they're doing, but I think we can openly, admit that the DeFi ecosystem there is like underdeveloped or immature versus like the rest of the chains, and that's not a criticism. I think it's just like a statement of where it's at. I think that is less interesting to us than the centralized distribution of just sitting within the wallets as like a savings technology that sits alongside Tether. So it's pretty cool where you'll actually have within your, the main app that actually has the real users sitting within the wallet rather than like the DeFi ecosystem itself. You'll basically just have an option to toggle between USDT for payments, sending to your friend, all that kind of stuff, and then savings, which is sitting with Athena as like the only option there within the main app itself. The cool thing about that, in my perspective, is that what is the one financial product on earth that like everyone wants out of finance? It's basically just holding $1 in your bank account, getting a yield, and then spending with it. And you're actually able to do that through a single token sitting within your Telegram app itself. So holding USDE, saving and like generating a yield on it, and then integrating card payments as well directly within the app, where you can actually just double click on your Apple Pay and then just spend your USDE that's in your wallet directly on your phone payment. So to me, that's like a very cool, very real use case that can actually touch the hands of like many hundreds of millions of people if you deliver it in the right format. And I think the cool piece here is that we're also getting to work a bit closer with the Tether team because, I think the Tether obviously was like the only asset that was sitting in there, and they were quite defensive, I think, in terms of who else was coming in there to operate alongside them.
Yes.
I think the piece that people don't realize about Athena and Tether is that 70% of the perpetual market is actually denominated in USDT. And so what that means is that when Athena is backed one-to-one with perps, a dollar increase in USDE supply necessarily creates 70 cents increase in USDT supply, because as we're adding a short to the market, you always need a long to match that short. And so that actually creates like 70 cents of Tether demand on the other side. So you can actually think about like, as Athena is growing, 70% of that growth is actually feeding through into Tether on the other side, which is something that even Paolo didn't realize until like a couple of months ago. And so that's one piece where we're, I think they're like a bit more open now to us basically working on Telegram and Ton now sitting there, because they sort of understand that even if assets are flowing into Athena, it sort of feeds through into them as well. And so, yeah.
And are the Germans holding it up still, or this is separate as well? Or okay, this is completely separate.
This is just more of like a technical implementation thing. We had to rewrite all the contracts specifically tailored for Telegram, and that's just taken a while to get audited. There's obviously many pieces of the business that sit within Telegram across different teams and that kind of stuff. And I think we'd always guided towards Q2 for getting that product out. So yeah, this is just something that's been a tech and engineering rollout rather than anything else blocking it. Yeah.
Does having ethereal prevent you from going on like Hyperliquid, for example?
So we bought the ticker for Hyperliquid, which you might have seen. And so yeah, we've got the USD ticker there. We're just waiting for connectivity between Hypercore and the EVM, which allows the arbitrage to actually close before we actually start to put any real assets on there. The issue though is that Hyperliquid is not designed in a flexible enough way where you can actually just take that as collateral to trade on portfolio margin, and a blocker that they're always going to have unless they rip up the entire order books being denominated in USDC. So the use case there is kind of like if you want to close your positions on perps and then swap into USD as like a savings asset in the spot side of the book. So to almost sit there as like an HLP equivalent, if that makes sense, within the spot side of the exchange.
Yeah.
There's like a savings tool, which is like one click away. Obviously USDE within the EVM can be useful in the same way that it has in other ecosystems. But I think, it doesn't sound like there's a big urgency or desire from the Hyperliquid team to, either push portfolio margin on the exchange itself or allow for different assets as collateral on there. And so you're never going to be able to have this sort of like yield bearing use case on there until they've sort of like redesigned the way that they've done the exchange there. Yeah.
I guess until like Ethereal makes significant headway in volume and traffic and TVL, they will start sort of maybe consider it.
It's an interesting question though, because like I think a lot of people have speculated around a Hyperliquid stablecoin coming as well. And I'm not saying this because we're building on and I'm trying to put down the idea, but like if finance can only grow FDUSD to like very low single digit billions, there's a very good reason for that. And it's like when you shove your own stablecoin into your own exchange, it's very limiting unless you can be using it across every single exchange. And the very interesting piece about this is that it's a huge like risk to your own like core business, which is like printing millions of dollars now, to actually rip up the liquidity around one pair and say, okay, come do it on a new pair instead of the USDC one, because you actually just run the risk that people don't ever come back and make that pair liquid again. And that's actually the moat that Tether has with Binance, which is no one wants to take the risk of ripping up the BTC USDT pair because it prints Binance $10 billion a year. And so, Paolo can make 4% on that because no one ever wants to run the risk of killing the exchange business. And that's the same that I think Hyperliquid is in now, which is it doesn't make logical sense to sort of risk the core trading business in my view to try and shoehorn your own asset in on the other side.
I guess since Trump became president, it's been about, I guess, a couple months. Has the U.S. regulation gone more friendly to you? And importantly, the Stable and Genius Act that we hear, like the way that regulatory sort of regime is going, do you feel like it helps you, the USDE? Does it feel like it hurts you? Is it important that you're regulated as like a payment stablecoin in that regime?
No, not from our perspective. So, I'm very happy. I think with where it's like landing at the moment, which it looks like there'll be a carve out for everything that isn't like pure payment stablecoins right now, and they'll come to address it within 2 years. And I think in the conversations that we've been pulled into, there's like specific mention of Athena and Sky being in this bucket of like other that they'll come to in
Good.
2 years.
Uh-huh.
So I think that that's as much as we could have asked for there. We don't have retail presence now in the US, which we are exploring, and we think that like iUSDe is actually the better sequencing of events here, which is like face off to US institutional users with your product first to sort of slowly get your way into the country in a more conservative way, and then the plan that we have is to actually, before actually opening up retail access, without sort of checking with anyone, we want to go into the SEC for a no action letter from them, which is basically just going in to say, this is our product, this is what we do, this is why we think it's beneficial to consumers, and can you give us the okay before we do it, before we come in? So I think that that's our approach. We just don't want to take any unnecessary risk now, which is sort of like presuming that people are fine with everything and risking something. So that's kind of our approach here, which is phase in with iUSD and the institutional product, and then get explicit confirmation from people there that they're fine with what we're doing before we fully open up the retail presence.
And what's the timeline there?
I really can't give one. So we've been in conversations with them, but I think I don't want to overcommit on that side because obviously that's pretty much entirely outside of our control.
Got it. And has any of the I wouldn't want to call it competition, but there are a bunch of folks that recognize the spaces trade. FalconX, StanX, CredX, Agora. I don't know how to phrase this question, but has any of them sort of pulled volume from you, or do you view that as any of them as like potentially threatening to your business?
I think the honest answer is no. Like a few of them have got to like low 9-figure size, and I think the growth of one of them. So like one was called Resolve, and I sort of came out and I was complimentary to them, saying like they approached the design interestingly, and then their TVL like 4x'd in 2 months after I sort of
Nice,
okay.
very helpful. Yeah,
Their own LPs are actually leaving Athena, and they're like, "Oh, you think it's safe? Okay," and then they went in there. No, I think the issue is that everyone is kind of like already so many steps behind in terms of like integrations, getting to the right places and that kind of stuff. And I think maybe I'm being too dismissive here, but I think once you've got Binance collateral, people will basically just stop doing that, and it just becomes an extremely high hurdle for people to come in and convince like these big platforms that have done the work on Athena and got comfortable with what we do, I think, to open up to others. I think the big piece here, and I think it worked in our favor, was actually going through the Bybit incident and some of the liquidation stuff that we have this year, and having like literally zero issues out of what people perceive to be, one of the worst right tail events that could have happened, left tail events that could have happened to Athena without like any issues. I think it actually built a lot of confidence in the market to say like, it's actually pretty lindy now, and there's a pretty high hurdle for what I need to see from someone else to not just use Athena and be comfortable with what they're doing, if that makes sense. So I think if you're going to come in and compete now, you have to so explicitly beat Athena in terms of returns where that trade-off makes sense, i.e. taking the risk on a new team who hasn't proven themselves at huge scale for what has been like, over a year now. And I think that's just a pretty high hurdle for people to come in and do. So yeah, there are like, there's been, I'd say 5 to 10 that have like emerged in the last year. They all get to like low 9 figures with, side TVL deals and that kind of stuff, and then sort of die off after. So, yeah.
Understood. Got it. So if I were to summarize, it seems like the plan here is appease, well, I wouldn't say appease, but answer all the questions regulators may have, figure out a way to get into the US, but in the meantime, solve the hurdles you have with traditional institutions that can onboard you through iUSDe, clear the hurdles with more exchange adoption, clear the hurdles for reaching retail at the moment, mostly through Telegram, and hopefully you could get the 5 billion TVL to add another zero to the end of it, maybe in 1 quarter, 2 quarter, and then in the meantime, maybe increase the, war chest from 60 million to, I don't know, call it 100 million if the yield and the TVL increases, so you can start cutting $5 to $10 million deals with more strategic partnerships that widen the TVL. Is that a right way to think about your roadmap? Did I miss anything?
Yeah, I think on the just the cash piece at the end, we can still capture that those millions of dollars to like the Treasury or whatever, and we can still fund those other things that I've described there very easily. Like we have more than enough money to go and do those deals, and it's more an example of like growth versus like capturing value type thing, which I was just trying to give as like an example. So yeah, all those like pieces that we can go out and do aren't conditional on us generating more like cash income going forward. We can afford to do those things right now. I think the other piece I just wanted to get across was that this period reminds me very much of I think when we maybe did the first one of these, I think around like 6 months ago, which is kind of just before things took off in Q4, where TVL had stalled, rates were low, everyone's like, this thing's never growing again, it's like dead in the water. And then the thing about Athena is that like the growth is very violent and like non-linear, where you go through these periods of like lulls and you can see it on the chart, and then it just adds like 4 billion in like a month when like rates come back. I think the piece that I just want to get across is that like even in Q4 of last year, we really didn't have much of the infrastructure set up to even capture like a big amount of the opportunity. Like we had one centralized exchange. Aave wasn't even listed. Like if you remember, we had to cap out the growth of Aave. It was like capped at like 100 mil a week, and then the opportunity sort of disappeared when I got to $1.5 billion. Sky hadn't like opened up for like $1 billion of allocation directly from there, and you didn't have any of these like institutional pathways, new pieces around like Telegram and that kind of stuff. So the point I just want to get across is that when the market comes back, and that doesn't mean that yields are like 20, it means like 12 to 15. This is going to grow like twice as fast as what you saw in Q4, because the tentacles of Athena are just sitting in so many different places now, where the access point to just get in and for this thing to grow is that much quicker. And so even as like a stepping stone bridge type thing, like Aave has basically completely delevered its USDE holdings. So that's gone from like 1.5 bill back down to zero. Like when rates are attractive to do that loop, that's like 1.5 to 2 bill, like just out the bat sitting on Aave. You've got a bill from Sky, which when it sort of clears their cost of capital, that comes in like very easily from their treasury holdings. The Telegram thing, like what we've been discussing with the foundation there in terms of like targets, how we're both putting like incentives, and like the incentives that are coming from the Telegram Foundation, that's like targeting 1 to 1.5 billion as like a rollout that we're doing over there. And then there's this like iUSDe piece, which I mentioned, we're sort of expecting 500 to start, but like who knows how that happens when it's like 15 to 20 in size. So like that's just like literally 4 different things that I've described there, and I think that's like 3 to 5 billion just straight out the gates without any normal sort of like return coming in the market. So yeah, I think that's one piece I wanted to get back, was that actually the growth that you saw in Q4 was us actually with pretty limited distribution, I think, versus where we are right now. And trust from people like pre-Bybit. And so I think when this does come back, if yields are anywhere even like close to 15 to 20, it's like north of $10 billion like very, very quickly. Like literally is my view. Yeah.
That's very helpful. And then that's a good segue, which is kind of my final question. And then maybe the members will have some more. It would seem like a lot of the groundwork and infrastructure work you have done set yourself up for step functions of USDE TVL over time. And this is contrasting with a token dynamic where the vesting are happening now, and you have a cap table previously that probably need DPI, need returns, and you're sort of basically gunning the business for growth at the moment, which is redeployment of treasury dollars into growth efforts. I guess the high-level question is, how do you think about maybe in the short term, the 3 to 12-month horizon, the potential decoupling of your token price versus the fundamentals in the TVL that you're building?
Yeah, I think it can happen, and the token itself is always going to be quite reflexive to the cycle, I think, because like when it was north of like run rate $1 billion of revenue in December, doubled in a month, like it looked like you could argue even like cheap relative to the growth back then.
Yeah.
So yeah, it's obviously extremely cyclical. I think we did obviously see like a lot of turnover in the cap table during this unlock, I think, and you can see all the stuff on chain. And I think we shared a note with some of the people on this call when it happened. There was quite a bit of selling that actually came through from like some of the earliest investors who are up like 160, 200x basically around the unlock. I think that there's a big bifurcation within the cap table of the largest holders, including myself, plus just the largest VCs, who actually have not sold a single token, and I think are actually opting this out for a much larger outcome. And then sort of smaller trading entities, trading firms, and that kind of stuff, who basically sold everything that they did. And so there's like this very weird distribution of like some people have sold 100%, and then the others who sold the most are basically holding up for much higher. I think, and obviously you need to do your own work on this. I'm talking my own book, but like my perception is that the heaviest amounts of that has basically been washed through right now in terms of like that initial unlock that came through. I think the piece to get across, and you can see this on chain, is that like I myself haven't touched a single token. The majority of our team really haven't done much at all, and the largest holders themselves have chosen to hold for higher rather than take the liquidity that was there.
Helpful, thank you. Any questions from the members? And Guy, is there anything else we haven't covered that you want to talk about?
No, I think that's it. I think,
extensive
on here. I think where, I don't know, market is exceptionally weak, rates are down really low. We've had like many months of stalling growth, but I think we've been through this period before a couple of times last year, and I think the piece I wanted to get across was just, we're still here trying to take big swings at big ideas to move this forward. And I think, like before, people will be surprised when the market does come back, how aggressively this can sort of like swing back to the upside. Yeah.
Cool. Guy, thank you so much for your time. Appreciate you.